If you bought one of these planes in 2025 thinking it was a solid investment, I have some bad news for you. The general aviation market just went through one of its roughest corrections in years. Rising tariffs, a flood of inventory, disappearing tax incentives. The perfect storm hit aircraft owners right in the wallet. And it didn't matter if you were flying a humble Cessna 172 or a multi-million-dollar Citation jet. Nobody was safe. In this video, we're counting down 10 planes that took the hardest hits, from the trainer sitting at your local flight school all the way up to one of the fastest civilian aircraft ever built. We're talking real market data, real numbers, and real losses. So whether you're thinking about buying, selling, or you're just curious how bad it actually got, stick around. Because by the end of this list, you might be seriously reconsidering that aircraft purchase. Let's get into it. The Cessna 172 is the most produced aircraft in history, over 44,000 built since 1956. It's the plane that taught the world how to fly. So when even the Skyhawk starts losing value, you know something serious is happening in the market. In 2025, a used Cessna 172 in solid condition, think a 2014 to 2018 model with a Garmin G1000 panel, was trading in the $220,000 to $260,000 range. By 2026, those same airplanes softened to roughly $218,000 to $257,000. That's a 0.93% decline. It doesn't sound catastrophic, and honestly, for this airplane, it isn't. But the trend matters. For years, the 172 was practically recession-proof. Flight schools were gobbling them up. Private pilots were paying premium prices. That era is cooling off. What changed? Brand new 2025 Skyhawks now cost close to $500,000 off the factory floor. That price tag is scaring buyers away from the new market and pushing them toward older, cheaper models, which puts downward pressure on mid-vintage used prices. Add rising hangar costs, higher insurance, and economic uncertainty, and suddenly even the world's favorite trainer is feeling the squeeze. The 172 will survive this. It always does. But for the first time in a long time, owners are watching the value tick down instead of up. The Piper M350 is one of the most unique airplanes on this list. It's the only pressurized single-engine piston aircraft in production today. That means you get airline-style cabin pressure in a propeller-driven plane, letting you cruise above most weather at 25,000 feet while your passengers stay comfortable. It's a remarkable engineering achievement, and until recently, it commanded a remarkable price tag to match. In 2025, a used M350 was trading around $1.32 million on the used market. In 2026, that figure softened to approximately $1.28 million, a 2.8% decline. On paper, $40,000 doesn't seem like much, but in the piston world, where values are supposed to be stable, that kind of drop in a single year raises eyebrows. The culprit? Tariffs. Piper's supply chain relies on components sourced internationally, and new trade policies drove up operating and manufacturing costs. That uncertainty spooked buyers. When the cost of ownership rises and resale value falls at the same time, the value proposition of a $1.3 million piston airplane starts looking shaky. The M350 is still an incredible machine, but the market is asking a hard question in 2026. Is the pressurization really worth that price premium anymore? The Beechcraft Baron has been the gold standard of twin-engine piston aviation for decades. Two Continental Line 0550 engines, 6 seats, retractable gear, and a legacy that stretches back to 1961. Serious pilots have always considered it a step up, a real airplane for real missions. In 2026, that reputation is still intact. The bank balance, less so. The Baron G58 dropped roughly 3.5% in value between 2025 and 2026, sliding from around $1.28 million to approximately $1.24 million. That's about $40,000 gone in 12 months, without a single dent, without an engine problem, just sitting in the hangar while the market shifted underneath it. Here's what happened. Single-engine turboprops, planes like the Daher TBM series and the Pilatus PC-12, became increasingly price competitive. For the same money as a Baron, buyers started asking, why run two piston engines with double the maintenance, double the fuel burn, and double the overhaul bills, when a turboprop gives you better performance with one engine and a fraction of the complexity? The Baron isn't going anywhere. It still has a loyal following and a proven track record. But the twin-piston market is shrinking, and the Baron G58 is caught right in the middle of that uncomfortable reality. The Diamond DA40NG is the European answer to the Cessna 172. Austrian-built, composite construction, diesel engine, incredible fuel efficiency. It burns around 7 gallons per hour, roughly half of what a comparable Cessna drinks. For environmentally conscious buyers and flight schools watching their fuel bills, it was an extremely compelling argument. In 2025, a clean used DA40NG was priced around $415,000. By 2026, that dipped to approximately $410,000, a 1.2% decline, not dramatic in isolation. But for a modern composite aircraft with relatively low production numbers, any softening in value is notable. The issue is largely external to the airplane itself. Diamond Aircraft is Austrian, and trade tensions and tariff changes created real uncertainty around imported aircraft and their parts. Flight schools, Diamond's biggest customers, started hesitating on new purchases, which reduced demand in the used market too. When institutional buyers pause, the whole market feels it. There's also the perception problem. The diesel engine, while efficient, still makes some American buyers nervous. Avgas availability is shrinking, and Jet A-powered aircraft make logical sense. But habits die hard in general aviation. The DA-40NG remains a genuinely excellent aircraft. This dip is a market story, not an airplane story. Now we're talking real money. The Cessna Citation X Plus is not your average airplane. It holds the record as the fastest FAA-certified civilian aircraft ever built, with a cruise speed touching Mach 0.935, just shy of the speed of sound. Fractional owners, corporate flight departments, and high-net-worth individuals have coveted this jet for years. In 2025, you were looking at roughly $12.5 million for a clean used example. By 2026, that number had softened to around $11.98 million. That's a 4.13% drop. And on a $12 million airplane, 4% means you lost over $500,000 in 12 months without leaving the ground. What drove this? The super mid-sized jet category was one of the hardest hit segments in the entire used aircraft market. Inventory in this class jumped 26% year over year. A massive flood of supply with not enough buyers to absorb it. When inventory surges like that, sellers start cutting prices to compete, and the whole category trends down. Add the phase-out of bonus tax depreciation, which dropped from 60% in 2024 to 40% in 2025 and just 20% in 2026. And suddenly, the financial case for buying a pre-owned Citation X Plus looks much less attractive to corporate buyers who built their acquisition strategy around those deductions. Still the fastest, still breathtaking. But in 2026, even speed doesn't protect you from market gravity. The Piper Archer TX is the everyman's airplane. Affordable, reliable, simple to fly, and backed by decades of Piper's Cherokee lineage. Flight schools love it, private pilots trust it, and for years it held its value surprisingly well for a 4-seat single-engine trainer. In 2025, a well-maintained used Archer TX, a 2018 to 2021 model with modern avionics, was trading in the $280,000 to $340,000 range. By 2026, those values slipped to roughly $275,000 to $334,000, a 1.84% decline. When the entire piston single category moves together, no individual model is immune, not even one with Piper's loyal customer base. The deeper problem is positioning. The Archer TX exists in an increasingly crowded middle ground. Below it, older Cherokee models offer similar flying experience at a fraction of the price. Above it, the Cirrus SR20 and DA40 offer modern avionics and composite construction for buyers willing to stretch the budget. The Archer sits between those worlds, and in a softening market, middle ground aircraft always feel the pressure first. Piper's engineering is solid. The airplane does exactly what it promises, but promise alone doesn't stop depreciation when the market decides to reset. The Cessna TTX, originally the Columbia Corvalis before Cessna acquired the brand, was supposed to be the future of high-performance piston aviation. Composite airframe, 235 knots true airspeed cruise, Garmin G2000 avionics, sleek low-wing design. On paper, it was everything the modern pilot wanted. In reality, it became one of aviation's most cautionary tales about what happens when a manufacturer walks away from a product. Cessna quietly discontinued the TTX in 2018. No announcement, no successor, no clear reason, just gone. And ever since, the used market has been slowly processing that abandonment. In 2025, a clean TTX was trading around $660,000. By 2026, that softened to roughly $643,000, a 2.5% decline. The real issue isn't this single year's drop, it's the trajectory. When a manufacturer stops supporting a model, parts availability becomes a long-term concern, avionics updates stall, and insurance companies start asking uncomfortable questions. Buyers know this. They price the uncertainty in. The TTX is genuinely fast and genuinely capable. Pilots who fly them tend to love them. but loving a discontinued airplane and buying one at full price are two very different decisions. In 2026, the market is making that distinction louder than ever. The Cessna Citation Sovereign occupies a very particular place in business aviation. It's not the flashiest jet on the ramp, it won't win any speed records, but for over a decade it was the workhorse choice of serious flight departments. A large cabin, long-range Citation that could carry 8 passengers coast to coast without breaking a sweat. Corporate America trusted it implicitly. In 2025, a used Citation Sovereign was commanding around $6.4 million. By 2026, that figure had retreated to approximately $6.1 million, a 4.65% decline, and one of the steepest drops among large jets during this period. That's $300,000 evaporated in a single year of ownership. The large jet category was particularly brutal between 2025 and 2026. Inventory in this segment fell sharply month over month, but asking prices fell regardless, a sign that sellers were growing impatient and cutting numbers to close deals. When motivated sellers outnumber motivated buyers, price integrity collapses quickly. The Sovereign's age is also catching up with it. Newer entrants from Bombardier and Embraer offer more modern cabins, better fuel efficiency, and fresher avionics at competitive prices. For a buyer writing a 7-figure check, fresh technology is a powerful argument. The Sovereign is paying that price right now. If the Cessna 172 is the plane that teaches you to fly, the Cessna 182 Skylane is the plane that makes you feel like a real pilot. More power, more useful load, more range, more capability in every meaningful dimension. For decades, it's been the natural step-up aircraft, the airplane private pilots graduate into when they're ready for something more serious. In 2025, a clean used Skylane, a 2012 to 2019 model in good condition, was priced in the $280,000 to $400,000 range. By 2026, those values slipped by roughly 1.5%. Settling around $276,000 to $394,000. The Cessna 182 has historically been one of the most value-stable aircraft in general aviation. Any downward movement gets attention. What's happening here mirrors the broader piston market. Brand new Skylanes now cost close to $650,000 off the factory floor, pricing out a significant portion of traditional buyers. Those buyers aren't disappearing. They're hunting for older, cheaper 182s from the 1970s and 1980s, which drives demand away from modern used examples. The vintage market eats into the contemporary market. Meanwhile, maintenance costs are climbing, fuel burn remains a concern at 12 to 14 gallons per hour, and younger pilots are increasingly drawn to technically advanced aircraft at similar price points. The Skylane remains beloved, but beloved doesn't mean immune. And here we are, number 10 on our list, and arguably the most painful entry of all. The Cessna Citation Mustang was supposed to democratize jet aviation. A very light jet small enough for one pilot, affordable enough for owner-operators, and fast enough to make turboprop ownership feel pointless. When it launched, it was a genuine revolution. The entry-level Citation, the jet that put wings on dreams. In 2025, a used Mustang was trading around $1.85 million. By 2026, that number had fallen to approximately $1.76 million, a 5% decline, the largest percentage drop on this entire list. On a light jet, 5% means nearly $90,000 gone in 12 months. The story behind the number is a familiar one by now. Light jet inventory surged more than 9% month over month during this period. The Cirrus Vision jet, newer, more modern, and increasingly accessible to owner pilots, was aggressively eating into the Mustang's buyer pool. And the phase-out of bonus depreciation tax incentives hit owner-operators especially hard, since many Mustang purchases were originally structured around those deductions. The Mustang is still a capable, charming airplane, but in a market with rising inventory, shrinking tax benefits, and younger competition, even revolutionary airplanes eventually become just another used jet on the ramp. So there you have it. 10 airplanes, 10 stories, one clear message: no aircraft is completely safe from market forces. It didn't matter if you spent $240,000 on a used Skyhawk or $12 million on a Citation X Plus. Between 2025 and 2026, the market humbled them all. But here's the thing, a crashing value isn't always bad news. For sellers, yes, it stings. But for buyers who have been sitting on the sidelines waiting for the right moment, this might be exactly the window you've been watching for. More inventory, softer prices, and motivated sellers create opportunities that simply didn't exist 2 years ago. The bigger lesson here is one that experienced aircraft owners already know: aviation is not a stock portfolio. You don't buy airplanes to get rich, you buy them to fly. The pilots who bought these planes because they needed them, used them, and maintained them well, they're fine. The ones who bought purely as an investment and expected the market to keep climbing forever, they're feeling it right now. Markets correct. They always do. And when they correct in aviation, they create the best buying conditions in years. If you found this video useful, hit subscribe, because we're going to keep tracking exactly where this market goes next. And if you're thinking about buying one of these planes at the new lower prices, drop a comment below. Let's talk about it.